Hi folks, welcome to a product review at Finominal. Today we're going to analyze Fidelity's 35 billion Magellan fund that trades under the ticker FMAGX. Now, this is a very old and established fund where the fund managers select high quality growth stocks that have the three Bs. Now, the three Bs are brand, barriers to entry, and best in class management teams. Now let's investigate in terms of what makes this fund so successful with $35 billion of asset management. And if you look at the benchmark as per the fund manager, i.e. Fidelity, it is the S&P 500. Our alpha analyzer tool does actually suggest the S&P 500 growth index. But if you look at the R squared of FMAGX versus the S&P 500 growth index or the S&P 500, they're almost identical. Same thing with tracking error and correlation. So we're going to stick to the S&P 500. From a performance perspective, we can see that the Magellan fund effectively has underperformed both indices since 2001. Now, we see initially there was a bit of outperformance, but there's pretty much consistent underperformance since then. Now, let's investigate in terms of how we can explain the return and risk of the Magellan fund. Now, we do see from an active factor exposure perspective, there's only really consistent exposure to the momentum factor, which we see over here. The exposure to low volatility is kind of like consistently negative. Okay, so that means that the stocks are more volatile on average, which kind of makes sense if you have kind of like high growth momentum stocks in your portfolio. We also see that the exposure to quality, size, and value was kind of time varying. Now, that's kind of as expected. Moving on to alpha, we do see that the active share of the Magellan fund was relatively low at 64%. We do see also that the alpha consistency was low with only 12 out of 21 years. And if you look at the alpha over time, we also see that, now I'm focusing on the yellow bars here, right? That this was very inconsistent over time. And so in some years, this was more negative, some years this was positive and so on, right? But there's no consistency here. And if you look at the cumulative return contribution, almost all the return of this fund is simply explained by the market, which is not that great. Now, you can see the alpha is negative, the contribution from factors has also been negative. Now, this is for FMAGX on a standalone basis. Now, let's have a look at in terms of how it has performed versus peers. We have selected three other kind of like large cap growth funds, one from SEI, Vanguard, John Hancock, and we have also included the iShares S&P 500 growth ETF. Now, from a performance perspective, what we do see is that since 2012, the Magellan fund kind of has performed, well, I guess in line. It's always a question in terms of when you measure it in terms of start and end date, but it certainly hasn't outperformed its peers. From a pure POS perspective, the Magellan fund is 52 basis points, at least this share class, which is cheaper than some of these other products. But if you compare that with a product from Vanguard or even the product from iShares, i.e. the passive alternative, these are far cheaper. Now, the other aspect that's quite interesting to highlight is that from a risk return perspective, we do see that Fidelity performed quite poorly over the last 13 years to those other peers, as well as the index itself, the best benchmark as for growth ETF. And we can see its volatility was on the lower side. But that effectively means that from a risk return perspective, given that the kind of like, return was on the lower side, the Sharp was 0.86, which is lower than that of the S&P 500 growth ETF, or for example, the product from John Hancock or the product from Vanguard. That's not that great. Now, in terms of style exposures, so this is just in terms of comparing Magellan on a variety of fundamental metrics versus the other funds, we can see that these are large caps. They tend to be expensive from a valuation perspective. They are growth focused, momentum tilted, and quality focused. And the only difference in terms of Magellan versus those three peers or the passive benchmark is that from a volatility perspective, it tends to be low. Having said that, if you recall earlier, the returns-based factor exposure perspective actually showed negative exposure to low vol factor, which means that historically, the stocks of the Magellan fund were more volatile. And so this is a holdings-based analysis using current portfolio. So although the Magellan fund does perhaps look slightly more attractive in terms of being less volatile than its peers, we would disregard that because that's just like the current snapshot and not a fair representation of the longer-term style of this fund. Now, this kind of wraps up our short analysis of this product. I think, as mentioned, this fund does what you expect it to do. It does give you exposure to high growth, momentum with a slight twist towards quality. Having said that, it has underperformed since 2001, if you go back far enough. And if you're looking for like high growth stocks, you're much better off with simply buying the index, buying the S&P 500 growth ETF. It looks better from a short perspective, much cheaper, and yeah, that kind of like wraps it up. Hope that helps. Have a nice day.